SoFi is scheduled to report quarterly financial results on July 29th, 2025, and investors are asking me if they should buy SoFi stock before the company announces earnings, or if they should wait until after the results come out and then buy SoFi stock. Also, investors want to know if SoFi stock should be purchased at all, even before or after earnings. Of course, SoFi stock has rallied year to date in 2025. The stock price is up almost 39% so far in 2025. Of course, I'm happy about that because I've had SoFi stock rated as a buy all year long here in 2025, and my price target was between $20 and $22 per share for 2025. Now, the company is already at the midpoint of that price target I made at the beginning of the year. So I'll update you on what you should look out for from SoFi stock, and I'll answer whether or not I think the stock is a buy heading into earnings here.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the company's most recent update was for its first quarter of fiscal year 2025, and I wanted to share with you some of the highlights from SoFi's latest quarter. And one of the bigger things is personal loan delinquency. And you can see this in the bottom of this chart here. Personal loan 90-day delinquencies declined by 9 basis points sequentially, and net charge-offs also declined by 6 basis points to 3.31%. This is something I've been watching closely because SoFi's business, that's the biggest risk, is its large percentage of its loan portfolio is focused on personal loans, and those are highest risk loans when consumers go through a difficult economic time and they need to make difficult decisions. The personal loan is the first thing they will default on because those come with the least consequences when compared to an auto loan or a mortgage loan. So that's the area I've been watching most closely because around April, when President Donald Trump announced those tariffs, there was a huge slowdown in economic activity, and I was concerned that the US economy would go into a recession. And if we do go into a recession and there are job losses, SoFi's personal loan portfolio is at risk. So I've been watching that closely, and there's been a lot of good news on that front because even after President Donald Trump implemented these tariffs, while there was a slowdown in economic activity, the job market has remained robust because businesses are afraid to fire people and let go of people. And the reason they're afraid to do that is because they still remember back during the economic reopening in 2022, they had such a difficult time getting people back to work. They had such a difficult time hiring workers. And so they don't want to let go of workers again because of a temporary recession. They just want to keep those workers, even if economic activity is slowing down. Businesses are keeping workers. They're just not hiring that many new workers. They're leaving vacant positions open. They're reducing the amount of hours they're offering to workers. They're reducing overtime. They're reducing shifts. They're finding ways to keep costs low. They're not making any new expansion plans. In that way, they're preparing for a potential recession without firing people. And that's really good news for SoFi because as long as people don't get fired, as long as people have a job, for the most part, they make their monthly payments. Credit cards, personal loans, auto loans, home loans. The biggest risk is when people lose their job and they don't have the income coming in. That's when defaults start to increase. So that's been a very positive sign for SoFi. Another positive has been the new legislation that was passed, and the big beautiful bill, as President Donald Trump is calling it. Included in that is certain provisions for student loans. It's going to make it harder for students and their parents to borrow money from the federal government. And that's going to open up an opportunity for SoFi to step in and other private lenders for that matter and make more student loans. So that's why SoFi stock has really rallied in recent weeks. is because of that provision in that big beautiful bill that will make it easier for SoFi to compete for student loans. So those are a few of the give and takes here for SoFi stock. Now, as I mentioned, the stock price is up 39% year to date in 2025. And I'm happy about that because I've had SoFi stock rated as a buy all year long here in 2025. And I update these recommendations regularly if you've been a regular follower of my channel. I last updated this on July 3rd, reiterating this buy recommendation. And I last updated my price target on May 13th to a midpoint of $21 per share for SoFi stock. And it's trading right about $21 per share right now. Now, when I go to fiscal.ai, which is my preferred data source, there's a link in the description if you're interested. The forward price to earnings ratio I retrieve is 66.4. This is the highest SoFi stock has traded for all year long. So the valuation is getting stretched here as enthusiasm for SoFi is increasing, and that's justified. The company has made a lot of progress here in 2025. A lot of the risks have been muted. The tailwinds are still in place, right? The digital bank is attracting many, many customers. The market for selling its loans, the third party investor interest for loan originations from SoFi is still very high. So the company can originate more loans and sell them to these third parties and generate lucrative fees with lower risk. And then you have the legislation that came out that will help facilitate more student loans for SoFi. A lot of things have gone better than expected for SoFi here in 2025. Of course, I expected those things, and one of those reasons, those are some of the reasons why I've been so bullish on SoFi stock here in 2025. Now, I've also calculated a proprietary discounted cash flow valuation for SoFi stock, and the intrinsic value per share I calculated is $19.16. I updated this calculation today. The current market price is $21.40. Given the volatility of this stock, I would say that this is fairly valued according to the current market price compared to my intrinsic value per share. So now to answer the question, should you be buying SoFi stock before the company announces earnings on July 29th? I would say no. The reason being it's already increased in price by so much in 2025. There's so much enthusiasm that's already been priced into the stock. The valuation is getting stretched both on a forward price to earnings basis and on a discounted cash flow valuation basis. Longer term, I'm still bullish on the company, but heading into an event that comes with higher than usual risk, and then SoFi stock is already a higher than average risk stock, I would not be going into this earnings release with a purchase. I would wait until after the results come out, and then I'll make a decision on whether or not I want to buy SoFi stock at those new valuations compared to the new figures that have come out. So for now, I'm going to say for SoFi stock investors, it should be a wait and see approach from the earnings. There's more downside here at the earnings release, in my opinion, than there is upside. So the risk of experiencing capital loss is higher than the risk of missing out of an increase here. Of course, after the earnings come out, I will review the figures and I'll update you on my opinions about SoFi stock.
Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.